Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. Although, actually, Dennis may or may not be here. He may be shoveling his driveway right now. I guess we're going to find out. He had some emergency shoveling to do with the snowstorm we got dumped on last night here in the Midwest. So if Dennis is here, he's here. If he's not, he'll be here. I promise. On today's show, though, we do have some movers this morning. Goldman Sachs went crazy in ratings land. We had a couple of headlines, right? More than a couple headlines, actually, out of biotech land on the JP Morgan Healthcare Conference, and we'll also get some auto news and some commentaries for the auto show. We had one of our news desk guys, Nick Donato, was over at the auto show yesterday. It was Media Day. He was there. He's going to pop on in a few minutes and tell us about what he saw at the auto show. And then at 8:35, we're going to be joined by Nick Shaheen. He's our options expert, the author of Create Income with Option Spreads on MarketFi. Joel, how you doing this morning? How was your drive in? It was a little bit crazy for me.
I had about a normally, which is about a 27 and 32nd minute drive. It took me about 55 minutes. People just don't know how to drive. There was one lady in the left-hand lane going 15 miles an hour with her flashers on. I was going to tell her just to get off the road. But S&P futures trading down just a half a point. The pre-market high, 66.50. That's just above the close. A lot of closes this 22.65 area. That's going to be my focus area today. Crude got hit yesterday. A little bit of a rebound. Not much at all. Trading up only a dime. Gold and silver, a little bit tired here. Gold reaching up towards 1,200. Stuck in the 1180 handle. Silver down a nickel at 1663. Dennis, are you done shoveling the driveway?
I just had to shovel it just because my wife's leaving, but my commute was good, Joel.
Okay. Hey, let's just go right into ETRM here. That's the hot stock of the day. That's the NVIDIA of this week. ETRM. What is this company, first of all?
Spencer, can you help us with that? Because I don't follow the company either. The stock 4 days ago was $1, and we know I don't like dollar stocks. I guess I should start following because it's $20 here now. What the hell is ETRM?
It's a medical device company.
And they just discovered all the medical devices in the world? Changing the world?
No, I don't know.
One thing to say is this stock has a history of doing crazy moves. Look back in 2016 here, or just at the beginning of 2016. The stock went from $7 up to $125 a share and then gave it all back. So we know this stock is prone to crazy moves. The last 3 days is absolutely insane. Like we were saying 4 days ago, started 2017. Stock was $1.75. It is now $20.50 a share. Wow.
The other thing, we could call it what we want, a dry ships, a K-Bio, whatever. It's a reverse splitter. So when I see these kind of stocks and I see the all-time high, 67,851, I know that it's a short float. It is high. There could be running this on, just getting all the shorts out of this. I'm looking on the pro. I don't really see much in here. I'd see news on they filed to sell 605,000 Class A units on the 9th. I don't know. If you're trading it, and I think probably the way someone like Ace trades it, or maybe some other, in and out, man.
These are trades.
Yeah, these are trades.
If you're sticking money thinking this is going to be the next big investment, just take a look at dry ships, and you'll be able to tell. Dry ships went from the $4 up to over $100, and now it's back down to $2 just 2 months later. When the dust settles on these things, I believe this is nothing more than a super short squeeze. You're punishing whoever is short, if they can short the stock even. The float is only, I believe, 2 million shares outstanding on this thing now. So it's very, very small, the float. And, you get these small floats like this. And obviously, actually, I think it might be less than that because of all the reverse splits. I'm not even sure if that number's accurate or not because it's had some reverse splits. So if you're, if you're trading this thing and you're good at trading these things, fine.
There you
This
go.
is way out of my wheelhouse. I always say that. Anybody who knows the show knows that I don't trade these stocks and move up 3, 4, 500% in the course of a matter of a few days. It's just not in my wheelhouse. I like more boring stocks, more predictable stocks. This is the opposite of that.
And great way to wrap it up, Dennis. I mean, if you're trading these things and you're making money, then go ahead and keep doing it. But you know what? If you're looking for any wisdom here on Benzinga's Pre-Market Prep Show, it's, just stay out, because you can have 1, 2, 3, 4, 5, 6 winning trades in this thing. And if you're caught at the wrong time, great example, dry ships, you're long at 80, you're going to sell it at 100, halt, doesn't open for a day, opens up at 20. I mean, it's going to be halted. Something's going to happen to end this insanity, but we're done talking about it at 8.
No, I got one more comment.
Okay, one more.
So, just these types of stocks, you know how I like boring. But if you are I'll reiterate what you said. If you make money trading these stocks, by all means, continue to do it. I'm not going to tell you to stop if you're good at trading these stocks. But if you are new to investing or you're new to trading, it is natural for a new trader to be attracted to this type of stuff. It gets a lot of media attention. It's, thinks, oh, I made 400% in one day. Timothy Sykes runs a penny stock newsletter. He's got a huge following as well. It is natural for a new trader to be attracted to this type of stuff. As a new trader, this is the hardest stuff to trade. I've been trading professionally and trading for 20 years, trading professionally for 17 years. I'll tell you, I can't trade this stuff. And I've traded, millions of physical trades. So it's difficult stuff to trade. If you have a niche, if you're good at it, there is some people, Ace likes trading this stuff. He's very good at it. But it's very difficult to learn how to trade this type of stuff. And you can say, oh, I can make 300%, but you can lose in a hurry on these things too. So I've always been a big fan of more boring stocks, more predictable stocks, trading the S&P, trading with an edge. And this is just, a little bit of chart reading, but a lot of randomness in moves like these.
All right, 8:07. We got Tricky Nicky Donato come. We got 2 Nicks on today. Nick Donato's going to come on today 10, talk about what's going on in the auto show. Dennis, you were real fired up about these rating changes. You want to go into those right away?
There's a ton. So let's just give you the highlights, and then we only got 2 minutes here, so I'll just fly through them. Citigroup got busy. They are downgrading Goldman Sachs. Goldman Sachs going out to a sell here this morning. Goldman is trading down 2 points in the pre-market. They also downgraded Comerica, CMA, to a sell. That hasn't traded here yet, but it is offered down at 69.23. But let's go to the Goldman chart, because everybody's been talking about the Goldman. Everybody's been talking about the big move that it had in the last month and a half from 180 up to 240. We've had some wicked consolidation here for the last month. Josh Brown on CNBC was saying this consolidation potentially go higher. I tend to agree with him. Usually you see a big move and you see a month of consolidation. Its digestion in the stock does continue higher. So I'm not really jumping in here on the short bandwagon on Goldman, although it has been a really impressive run. But Citigroup is, and Citigroup's saying sell the stock.
I wonder if Goldman is going to downgrade Citi tomorrow to a raging short.
Just fight. We're a brokerage fight.
Dennis, you pointed this out. Consolidation station here. You had the run up here originally. You've had a couple run ups, but you had the consolidation after the election here at the 212, 213 area. Another run up. You're tripling the consolidation period here. I would just draw some lines on the chart, and I'm going to widen it out a little bit, because you probably caught some people when it went under 240 the first time. I'll go 235 to 245. Which way it goes there. If it breaks above 245, this tremendous run can continue. 235, under 235, there's a lot of room to get back. I'm not going to figure any of the retracements out yet.
Yeah.
But let's go. What's a catalyst? I mean, here's a catalyst with Citigroup downgrading the stock, all right? I'm looking for another catalyst, and that catalyst is going to be earnings. And earnings come out on the stock on January 18th. If I was fortunate enough to be in this thing for a long period of time, and let's say I had, 1,000 share position, I would definitely be taking 500 off. I mean, is it going to go to 250, 70, the all-time high? I mean, to me, the risk-reward ratio in this thing, if you're long, if you caught this rally, I'm booking profits. If I miss out, then I miss out. Or, take some of the profits and buy some 250 calls if you're that bullish. But that's the way I'm looking at this going into the earnings
I
report.
think there's a trade there before the earnings report. Now, obviously, we're going to get a couple big banks reporting on Friday, too. We get J.P. Morgan, I believe, and Wells Fargo. We get Citigroup, too, on Friday, or are they Monday? Spencer, just quick?
I don't think Citigroup's on Friday, but go ahead. Go ahead with your setup, and then I'll look for the earning date.
So the point here, I think there's a setup for a trade, that maybe the banks are a little bit weak ahead of those reports. Now, I don't know what they're going to do on the reports. If they start to sell off ahead of the reports, then the expectations aren't as high. But let's see what they do for the next couple days, because there is a couple major reports coming on Friday. We have 3 trading days before then. I wouldn't be surprised to see a little bit of weakness in the banks, a little bit of profit taking, just because of the nervous Nellies that you're talking about, Joel. People who are setting up big gains, not wanting to hold them into the earnings report. So maybe there's a little trade to short these things over the next couple of days and then cover before Friday, because Friday's a more random event. Because, if the banks blow it away, then obviously, they're probably going to go higher.
Citi's not until next Wednesday.
They moved it back. Citigroup used to always be. Remember with J.P. Morgan, they used to always have Citi. So I guess Citi wanted to be on their own day. So they bumped back to Wednesday. But J.P. Morgan and Wells on Friday. So keep an eye on those stocks. Keep an eye for a little bit of weakness ahead, and then we'll see what happens with the number.
All right, it is now 8:11, and we're going to bring in one of our news desk analysts. That's Nick Donato. He big input into Pro, and he went over to the auto show over there yesterday with Chubbs. Nick, how you doing?
Gentlemen, how's it going this morning?
We're doing well.
Excellent. So yesterday we started off with Ford. That was the first presentation that came up. Mark Fields talking about the investment that he made in America. He also talked about a Chariot initiative. It was kind of like a ride-sharing service, and it talked about gridlock. A lot of Ford, what they talked about yesterday was their new technologies and new initiatives, whether it be an increased electric battery, a partnership with Michael Bloomberg on fixing gridlock, which he says relates to poverty and...
Why Michael Bloomberg?
Mike, you know what? He's a huge philanthropist, and it was one of the, I guess, what their reasoning was is that commute time actually is one of the biggest indicators of how successful you will be in life and economic standing. So that was one of the interesting parts that they mentioned. They also mentioned drones with their with their trucks. So it was definitely we saw some pretty innovative technology stuff. From the car side of things, I would say Toyota was the most impressive. They announced that there will be a $10 billion investment over the next 5 years. They announced the new Camry as well as a new Lexus. They were very, very flashy cars. I mean, by far, Toyota was the show stealer, in my opinion, yesterday.
What about drivers?
Is Tesla there?
Tesla was not there.
Haas.
Yeah.
I wonder why, because Tesla wasn't there last year either.
You know what? I think, honestly, they have there's a little bit of bad blood in Michigan right now with Tesla. As you know, that they aren't allowed to sell directly in Michigan. I don't know if...
Why is that?
It's politics. It's, you got the big automakers around. There's, I could go in depth.
Big three pull.
Yep, absolutely. I could go in depth, but
I would bet Big Three keeps them out of there too.
Oh yeah, absolutely. It's gonna take a while for Tesla to really establish, a presence in Michigan. The other thing I kind of want to mention was that the new Lexus LS 500 and the new Camry were really the show stealers. I heard other people talk about them at the Toyota conference. It was definitely the two cars that were I heard the most buzz on. So yeah, that was my takeaways from the conference. That was
Google or Apple there?
Neither that I saw. Okay. So yeah, pretty interesting. Mark Fields definitely was all around the place. I saw him going. He probably talked the most. He was the most available of any management there. So he was definitely trying to get Ford's investment out, trying to really promote what the company's doing in America right now. So it was. I would say, if I had to say who's most impressive to maybe least impressive, I would put Toyota 1, Ford 2. GM came in at 3. They're presenting today. I'll be going to their Deutsche Bank conference today, so I'll be able to give more of an update tomorrow. Lexus was really, fantastic. And then also BMW and Volvo had great cars as well, just not quite as flashy or as big as presentations as Toyota or Ford.
And any talk about their stock price, where their stock is going? I mean, there's been a nice run up here in both of them. Still serial underperformers here in this great bull market. People more interested in the cars. Anybody talk of stock price over
So there was no talk of the stock price. It would really focused on the technology and the cars themselves. The closest that we got to any stock price talk was Toyota's investment into America over the next 5 years. They just kind of gave some numbers that they were rattling off. I did mention the $10 billion over 5 years. I believe it was announced that it would be $1 billion investment by Fiat Chrysler earlier this week. And last week there was also mention of some other investments by Mark Fields and whatnot. So it was definitely more concentrated, more so on the vehicles and the technology themselves.
We've been on the line with Nick Donato. He's a news desk analyst here at Benzinga. If you have any questions about the auto show in particular, you can email Nick at benzinga.com. All right, back to the markets here, Dennis.
Let's talk Ford and GM here because we just got done going through. And, they're interesting setups here now. They had the big pop. Both of them had the big pop last week. And now they've consolidated. If you look at the move, and I'll let Joel do the air math on this, Ford from 12.10 to 13.30. What is that, Joel? What's the 50%?
Well, that's easy one. $1.20, 60, 12.70.
So we're right in there. We're a little bit below the 50% retracement there. The only concern here for Ford on the chart would be me is the triple bottom. Yeah. If it breaches that, and I know you love playing things through a triple bottom, goes down through 1260, you start thinking maybe it could give the whole move back.
Blowout numbers for the car companies in December. I don't know what expectations there are for 2017. I mean, I've been saying I'm going to add these things in my portfolio forever. And then I'm like, I look at the $30, $32 area. I mean, nice dividend on both of them. It's just, you haven't had just a good old-fashioned breakout. In fact, this thing has been in such a range since it re-IPO'd. Here it went to 27 cents. Basically between 20 and 40. I mean, I don't know. I mean, you can't get super excited about this thing until it breaks out above. I think the all-time high is like 41 and change.
Yeah, so the only thing, I did add Ford to my portfolio there. We know I had a little bit of Ford, and I added a lot more Ford. Right around this price, $12.60 before it had the move. Obviously, it's giving some of it back here. I like the dividend. I like getting paid to wait here. 4.75% is a nice dividend. I think it's safe. And, I think, that Tesla's going to obviously, come into the industry and have some impact here eventually. But I still think from a valuation perspective, these things are still cheap.
And I guess my 180 to 220 range here in Tesla has been...
Tesla.
Yeah.
Ooh, hot. Stock is hot.
Maybe I need to buy some calls now.
240. You know what? That was 240. I can remember that number back in 2015. I remember that number coming to play in 2016. If you look at the chart, 240 had multiple times that we were up there. It likes to go to the big whole round numbers there. So we're at 231 here now. I think there's room to 240. I think that's where it'll struggle, though. Would I be coming in here now? No, because you just had a 50-point run in a month, and you're trying to get the last 9 kind of late to the party. I do think there is room to 240, though. If I was in it, maybe I'd use some trailing stops, and I think that would be my target. But 240 is the number for me on this one.
Yeah, nice move up, and even though they had some real poor delivery numbers at their last report here, but
they bought it right back.
Yeah, they did. This is a tough one. I would say out of all the stocks that I look at, I mean, I think this one, I get bearish at 180 here, and it goes up, and then I tried to trade the rate. Well, actually, I didn't even try and short it at 220, but tough stock to figure out. 240, I like that number on the upside.
Okay, let's talk the movers from yesterday. There was a couple in a sector we have not talked about for a long time. The 3D printing stocks caught a bid yesterday big time. And we know January can have the effect, where you buy the dogs of 2016 and, they might get hot in 2017. Well, that would have worked well here now in 3D printing stocks as well, because 3D, DDD, went from $14.32 yesterday up to $17, almost got up to $16.94, settled at $16.73. SSYS also having a nice candle, breaking out above the 1850 resistance area. Looks like it has room to 20. Other one, XONE, was kind of a little more quiet. Really, 3D was the best performer yesterday, though, DDD.
3DD, the news. Yeah, let me pull it up right there. I think you're on mute though, Joe. By the way, I can quote you in the last one. So yeah, there is takeover chatter in 3D systems. Is basically
Where was that coming from? Do we know the source
Uh,
of that?
this is coming from. Good question. Where is it coming from? Let me read real quick. So first of all, the chatter is that they've hired an investment banker or bankers after being approached by GE, and there was also a really
Whoa.
large call by yesterday morning before this news broke. I don't actually know where this came from. I think it was like just general like trader chatter, and Bloomberg. So
I mean, there's a possibility. We've said this before, that there could be the possibility of a takeover, from one of the big guns is looking to scoop these up instead of trying to, reinvent the technology themselves. It would make sense for a company like GE. So I wouldn't just dismiss that because it does make sense to me. But I still say, the one company that I think is going to be the player in the 3D printing market in the long haul is Hewlett Packard. And nobody even trades it like a 3D stock. I mean, yesterday was trading down HPQ at 1468. It's the forgotten child. They think it's just legacy printing, but it's a printing company, and I would not be surprised if HPQ eventually has a pretty good presence in 3D printing here. And you know what? I don't mind Hewlett Packard at these prices here too. 3.62% dividend. It's your classic example of a cash cow. Maybe a value trap, but maybe there's some growth there from the 3D printing market as well. So I'm kind of interested in Hewlett Packard here, even though on the chart it looks terrible.
Hey, that dividend gives you some downside protection here. I mean, the 3D printing stocks, they had their run, right? Remember Triple D?
Yeah, yeah.
I'm going to have to go to the monthlies here.
I think it's like $90 or something.
97.28, long consolidation period here. SSYS, now you look, this thing started moving down in 14, but that SSYS hung up there for
forever.
3 or 4 months later, and then it ended up tanking. I mean, buying on these kind of rumors and facts, just wait. Let's see the news come out. A day, 2 days, 3 days. What investment banker was hired? What I would like to know. GE hasn't moved much on it. I'd be, maybe put more stock on this.
It'd be a drop in the bucket for GE. I don't even know if they took it over if it would move.
Yeah.
Because really, let's look. Okay, so what's the market cap? Just curiously, I'm just going to the market cap of 3D Systems here right now, bringing it up. So see how big of a pill this would be for GE to swallow. It's 1.62 billion, and you're talking about a company of GE with a market cap of 279 billion. So you're talking about nothing. Like literally, it's a 5 to 10 cent move for a stock like GE. But I think it actually could benefit it because I think people would be saying, "Well, GE wants to get into the space and maybe develop it." So I think GE would actually maybe rally a little bit if they were to take over a stock like 3D Systems.
And do you remember I think Spencer? I think this was pre-Spencer when Organova. Remember that was the hot stock.
And that didn't move yesterday. Did you see that one? ONVO did not move.
And didn't they come up with the 3D apple or something? Remember we were.
You read the joke, wasn't it? 3D apple you can eat.
Yeah, no, look.
It was really waxy though.
Yeah, you just don't want to, digest that ink or whatever. But I don't know. We'll see what happens.
But they are doing the organ parts, obviously. So ONVO is looking, into 3D printing organs. That's what it is, Organova. And it's an interesting concept. Again, it's, valuation. Are these things ever going to make money? Are they going to be profitable? Or are they just, concepts really that are never going to get, out into the public? I mean, ONVO is a definition of a penny stock, really. $386 million market cap, very small, $3.77. It's a speculative play. But it's had big moves before, and it's interesting. When it starts to get a little life in the space, sometimes you'll see, a stock like this, it's had just a quiet, it's been quiet here really for the last month. It was up to $4 a month ago, $3.77. I mean, I could see a trade in here. You just got to set a stop. So if you want to say, well, maybe there's going to be a little follow through, they're starting to get some life in the sector. You pick it up here this morning at $3.77. Maybe stop yourself out at $3.50. And you put a target on there of $4.50 or $5. So set yourself up with a 3-to-1 risk reward. I could see it.
Coming out of the chat, Bob Wire here. SSW had a nice move yesterday. No one follows this one. That's C-SPAN Corporation. Big technical level here, Bob Wire, if you're trading it today. You had a high yesterday of 1035, and then I see two other tops there. One at 1042 and another one at 1045. So that's a big level here, and a lot of room up here, a lot of air up to the 1250 area. But good catch there, Bob Wire. And I think that's something that I talked about last week is, not getting on the hot rod, not getting on the triple D, but if there's going to be moving in this sector, trading other stocks that are related to it. And I sure hope Bob Wire brought that up because it is a 3D printer. But anyways.
No, it's not. C-SPAN is not a 3D printing stock. C-SPAN is transports, shipping.
Oh, all right.
C-SPAN, think about the name. Seas, we transport on the sea.
All right, day 3D.
So it's SSW, though. He's also saying to have a preferred stock. They do. SSW.PRG paying a 9% dividend. I've played that one before. I don't, and I invest in a lot of preferred stocks. I don't have this one because this is a stock here that has, credit concerns, obviously. This isn't, a safe one like, some of the other ones that I mentioned on the show before. I mean, C-SPAN has had a world of troubles. Go out to the monthly charts. Stock used to be a $25 stock, is now a $10 stock. And you can see the preferred stock itself, too, if you were to bring up the PRG chart. Not sure if you can do that in this system here, Joel. But sometimes it's hyphen G. The symbology is always different for the preferreds. But, this stock got down to $18 back in November from 25. And it's on the comeback trail. It's down here at $22. It's moving back up. They're thinking the dividend's a little bit safer here now. But there's always risk involved when you're, trading these, stocks with these preferred stocks where the common is under pressure. So common's coming back, preferred's coming back here right now. It's not as safe as some of the other plays, but like Bob Wire says, 9%. So you can pay a little bit more to take on a little bit of risk.
All right, buy the preferred and short the common.
Well, there's a play there too. I mean, but that can get you as well because if the common comes back harder, really, the preferred's probably never going to go much above $25, where the common can keep going on you. So, it's funny in the credit crisis, back in the financial crisis, I did that a lot, where you saw, preferred stocks falling 80%, commons falling 80%. I was like, wow. The preferred's paying a dividend, and they were paying dividends of like 30 or 40% back in the financial crisis. So I remember doing it on HSBC. I bought a whole bunch of HSBC preferred stock, one of their preferreds, which was yielding me 40%. And I shorted the common against it. Because I'm like, if this goes to zero and financial crisis companies were going under, we lost Lehman Brothers. We pretty much lost Bear Stearns. We pretty much lost Merrill Lynch. They had to get bailed out, obviously. So, it looked like, Fannie Mae, Freddie Mac. We were losing companies left and right. But like, if we lose HSBC, well, they're going to both go off the board. And I'm going to scratch a trade because I shorted the same dollar amounts. But if they come back, my preferred stock, which is yielding me 40%, could continue to run. And okay, well, a common could go back to 80, but the preferreds usually come back faster. And that was one of the best trades I've ever made in my life because the HSBC, I ended up, we obviously did emerge from the financial crisis. And 6 months later or so, I covered my HSBC short after it looked pretty good, but I kept the HSBC preferred long. And I rode that thing from $3.91 all the way back up to $25 until I was actually called away like last year. So I got paid that 40% plus. I had the $3.91 all the way to 25, so I had that gain on top of it all. And that, was one of the best trades that I've ever made in my life. There is a time and place to short the common against the preferred. I'm not sure the C-SPAN, though, is the time for that because we're not in a financial crisis, and the C-SPAN has a lot more upside probably than the .PRG on the preferred side.
All right, Spinner is looking to pick up some AK steel here on a pullback. Now, you're not going to find two fans here of the 50-day moving average. What I will say is this has 3 down days in a row heading back towards the $10 level, so I don't think that I'm sticking out just buying it here and basing that 50-day average. Maybe see what happens if it gets closer to $10. Once again, big expectations here of what the Trump administration is going to do. Also, you went from 5 to 11.50. I mean, you could still come to trade in this 8.50 area, 50% retracement, and still be, in a bullish pattern. CLF, Dennis, I'll let you comment on this after. This one showing some little better support here. 1, 2, 3, 4, 5, 6 lows in this area. So if you're trying to buy it here, maybe want to cut out if it takes out $8.
These are up big here today, too. So, CLF is trading up in the pre-market. All your steel stocks are trading higher, 4.51% for Cliffs Natural Resources. But, looking back at the AKS, that's up 2.5% in the pre-market. Ex-US Steel's trading up 3% in the pre-market. So they're already getting a bounce here, getting a nice lift.
I'd sell
the whole entire steel sector. What's that?
I'd sell this bounce. I mean,
you're a seller of the bounce.
Yeah, for sure.
That worked yesterday. That worked yesterday because the steel was all trading higher in the pre-market, and it opened at the highs, and they beat it. So that worked yesterday, and sometimes what works one day works the next day too. So I'm not going to say, don't sell the bounce. I think, if I'm looking at an AK steel, 1050 you're kind of in the middle, but it's been trading 10 to 11 for the last month. I mean, that's the range. So if you're looking at the CLF, it's kind of been trading between 850 and $9 for the last week and a half. So it gets up towards the 9, it probably runs into sellers. Gets up there in the pre-market, I can't argue with you, Joel. I think I'd sell it too.
Yeah, I mean, just also this, just looking at this X, coming back. I mean, there's had some pressure on this little bounce back 3 days in a row. All the, people that got caught in this little downturn here, like, oh, wow, this is trading up here. I checked to see where your daily pivot was. I don't think we're anywhere near yesterday's high. And also if you're hanging on this, you believe this is the bounce to buy. I mean, you don't want to see this thing going red. I mean, we are positive here, 33.61 close, a ways up here, but I could see this
up a buck.
Yeah, I could see this working its way back down to the close.
Couple other stocks from the chat here. Downward Dog wants to know about UHS, United Health Services. This had a breakout day there yesterday. The stock has been hit. It got hit hard in December, but it's on the comeback trail. Not sure this one totally fits the description of the January effect because it actually started in January of 2016, way down at 105. So it really wasn't a dog, although in the last half it was a dog because it went from 140 down to the $100 area just at the beginning of December there. Back up over 110. I think that's a big number for it. A little bit of a breakout. You know what? On a pullback here, back down to the 110 area, you could take a shot.
Downward Dog, I got a nice level here for you in UHS. We went off the board at 111.54. I don't think you can ignore the pair of highs here at the 113 level, 113 even, 113.11. Another high in the middle 12 handle at 12.44. So that's a nice target on the upside if the rally continues. Nice day. It did break out yesterday if you were playing this through 109.50. So if you want to try and pick it up on the cheap, maybe you wait for a pullback to the old resistance area. Rio and BHP trading up today.
I'm looking. I'm looking for some justification there.
Rio, boy, this thing quiet consolidation. ADRs found some nice support. Let's see how much it's trading up. Oh, it's trading up considerably here. There must be some. What kind of stock is this? What kind of stock is this, Dennis? Rio?
No, these are going right back into
Steel?
mining. This is a mining stock, Rio. I'm just trying to grab the other one. BHP is usually, I think BHP. I'm just grabbing it just to be sure. Stock I trade all the time. They're both miners, yeah. So they're both mining, but I'm trying to see what natural gas is mostly BHP, but they do mine oil and gas, copper, aluminum. So these are miners.
Nice gap fill here on this. Not sure what the news associated with this. 40.49 is your pre-market high.
And then also from the chat, Twilio. This has been a stock that just can't seem to get off the board. I mean, it was $70 back in September. Had the ridiculous fall down to 30. It bounced off 30 once, came back down, bounced off 30 again. Third time's a charm, we always say. I think 30 is your resistance point here now. That's been the trouble. Last couple days, you can look at the last 5 days action and say, oh, there's a little cup and handle forming, a little bottom. Yeah, you could say that. I want to see the stock get above 30 and hold above 30 because that's been the resistance level here now, I think. I think that's a psychological hurdle for it. So until it can get above 30, you would say, Joel, maybe get a close above 30. It's hard to get interested in Twilio on the long side because it's been so weak. But it does fit the description of a stock that could maybe benefit a little bit from January effect.
Sean's talked to me about this one for a while, Sean Udall, and he's expecting a bounce here in it. He's kind of just been trading in and out of it. Hanging out right near, IPO 2366, tripled up to the $71 area. It's just hard to get excited about this. I think you have to wait. He's sure that they're going to do well at their next earnings report. But with these IPOs, it's about, okay, well, their earnings report's good. But what about the next report? What's the guidance? So Twilio trying to get off the mat.
Balances here, just a couple of note. 400, we were just talking about it earlier, 196,000 to buy. Alibaba is starting to look hot here. Obviously, Ma came over, met with Trump yesterday. That gave the stock a little bit of life. But, it had life before that, too. Alibaba's slowly been starting to come back and it's starting to show life again. 103,000 to buy here this morning, Alibaba. It's trading up a buck here in the pre-market. Starts to look open to $100 to me, Joel.
All right, the Bobster here. I just want to go to CMG here. Drops 4% after guiding lower, but then it popped right back up here. It popped out at 380 and back up at 407. Someone must be thinking, oh, the bad news must be out in this one. Nice movement in CMG. 835 here. It's time to bring in our Tuesday guest, Nick Shaheen. Are we going to take a break or bring him in on the fly?
Let's bring him in on the fly.
Nick Shaheen, he's an options expert. He is the author of Create Income with Option Spreads, and we're going to talk to him about the overall market and also some individual stocks.
Good morning.
Good morning, Nick. How you doing?
Doing well. How about you?
We're doing good here. We got a couple things that we want to talk to you about here, and one, I know how you like to play stocks going into earnings, right? And
Sure.
sometimes there's a play here. Now, Citigroup got a little nasty here, and they downgraded Goldman Sachs to a sell, a straight sell here. Nice run up in this issue. I know we got a little time, I believe another week or two before earnings. Give us your assessment here of the Goldman Sachs chart.
Well, that was one of the things I wanted to mention, that this Friday could be two of the things actually I wanted to share with you, that this Friday could actually be pretty important for the whole market in general. And I'm going to throw the bank in there all together. I think this is a collection of Citigroup, Goldman Sachs, JPM, Bank of America, etc. So the idea is that we priced in so much so fast, whether deserved or not, it's besides the point, up until now. So now they have to tell us, okay, here's what we did, and it could look good. But more importantly, I think the market will want to look as to what they say going forward, because the markets think the moon is really the target for banks because of the rate hikes, because of the fewer hands tied, because of the regulation, the elimination, etc. So if they don't say the same thing that we are expecting, that we might have a letdown. However, if they do say that great things are coming, we might see another leg higher. So it's going to be a binary event. And the interesting thing about Goldman Sachs is I think they report the week after. So usually the banks offer kind of a strange way to play a lottery ticket on earnings, because we have a few big ones that report first. So if I want to play banks in general, I could do the XLF, for example, and diffuse my risk. So if the first one disappoints, then XLF is not going to completely get obliterated, and my lottery ticket, if I bought calls or call spread, will still have value. But I could do it differently also and target specifics. Like if Goldman Sachs reports next week and JP Morgan reports now, if JP Morgan says good things, Goldman would rally. And so I can buy the Goldman ticket to play JPMs. You know what I mean? Sympathy, action thing. As far as Goldman specifically, we can look at the open interest and see what it tells us. The January, what is it now? 240 or so?
Yep,
242.
Yep.
Yeah,
242.
So it says that there, even though there is support scattered anywhere from 230 lower, there are some resistance that start, downside pressure towards like 220 or so, 225. So the easier path looks to be lower position. That's what the market is looking for through January expiration. So that could just give us a hint as to, okay, the upside surprise, the surprise will be to the upside, meaning they'll have to say something great for us to rally, punch that ticket way higher from here on Goldman Sachs through the January expiration, which would capture, I think, their earnings, not this week, but next week. So if I wanted to play Goldman Sachs, I might have a preview from JP Morgan, for example, or Bank of America. Do they report? I think.
Yeah, Friday, Bank of America, Wells Fargo. Nick, what am we looking at here from this chart that you have up of the comment? It says C plus JPM plus BAC plus Morgan.
That's just an addition of all of them. It's just a straight up slap of all of the banks. So you see, we ran up so fast, so high, and now we're tightly bunched in one little point. And usually, when you have a wide range come to a point, there's energy built in, and then it has to break out in one way or another. So the banks will either tell us a great story and we rally even higher from here, or they'll say, I don't know what you guys are expecting. We've already ran so much. I mean, it's not a magic bullet that we're going to get from the new administration. If they say something like that, then we might give back some.
Is this something that you did on your own, or is this?
It's just a straight up edition of their stocks. So
Wow, very nice, very fancy custom indicator here by Nick Shaheen. All right, let's move on here, and I mean this is pretty much related to, and you mentioned about the overall market here coming into earnings season. Nice run up in the S&Ps. The 20,000, we just missed it, Nick. You couldn't have bought 100 shares of Goldman Sachs and pushed us over. But tell us what you're looking at here, basis the S&P futures, or I can put a spider chart up there for you.
Yeah, well, the futures, I have last week, I had a price range that was kind of important. That was about 2264 on the minis to about 2268, and we seem to be coming back to it up and down. So we're consolidating around this area, but we do have important levels to hold. And overnight, we kind of dipped a little below 2260. That's one level. 2252-ish is, wishy-washy area is another level for me. The upside target, 22, yesterday's high, 2277, I think. My target was 2280, and then higher than that will probably be like 2318. But we're going to need a trigger. And we are in earnings season, and that brings me to another one that I want to talk about. When everybody was selling the big caps, I call them sleeping giants. Markets were trying to get to 20,000, and then suddenly the sleeping giants woke up. And Amazon was being sold, went long Amazon, and now it's not being sold. Same with Apple, same Facebook is a sleeping giant that came out of nowhere. I mean, it's about 125. That's amazing. So those sleeping giants have a lot more room to go if they can live up to expectations. So if I wanted to play earnings of those guys, which will put us up there, I mean, Apple is in there. The banks could put up to 20,000 or make it way back in the rearview mirror just from Goldman. And so I could play the Qs if I wanted to play the mega caps. And this will throw a blanket over all of them. So if Apple misses, but two other guys hits, then I still stand a chance to gain. So it's not a one-to-one relationship. So if Facebook hits a home run, okay, I won't capture all of Facebook. If Apple hits a home run, I'll capture about 20% of it if I just buy the Qs. But it's still a safer way of playing it as opposed to, throwing a couple grand into an Apple call and then it disappear over a binary event like earnings.
Nick, just jump into the technicals here on Apple because a lot of people traded. And this is a stock that everyone hated, back in September when the stock was down, around $95. Actually, I got to go back a little bit further than that. In the summer, stock was down 90, and people were saying, oh, I can see on Apple it's going to go to 70. And, me and you were saying that, unless, the iPhone causes cancer here, it's probably going to have a difficult time doing it. It's at a point, where it gets so cheap that, valuation starts to really matter here. And now all of a sudden it's back here up at 120, and people are getting all bullish here with Apple again. What are your thoughts here, first of all, on fading the market or fading the consensus opinion overall, and then specifically, what do you think of Apple at 119 today?
Well, Apple has been always undervalued. It's obviously worth money, now the excitement has fundamental basis and technical basis. So I threw in a chart that shows some sort of a cup and handle, whatever. It's a bullish price action where you have higher lows knocking on a neckline, the white line, and then breaking out from the white line. It should continue on higher. So the earnings will be make it or break it there. But here's my thesis. I'll tell you one thing that happened to us. We had a Samsung flambe special, and the phone literally caught fire, and it was not a Note 7. It was a Note 3. And the same, we sent it in, they fixed it and sent the same phone back. So the same very phone that caught fire. I couldn't believe it.
Wow,
So,
really?
yep, the same phone. Yeah, way to go, Samsung. So I was a huge fan of Samsung. They ticked me off that I threw away all of them and went out and bought 3 new phones. Out of 3 phones, 1 was an Apple. And not because my son loved Apple, it's just because that's what they gave us for free. So what I'm saying is that Apple is going to capture some of those Samsung people that left, not because they left for Apple, just because they just happened to shop and they landed on an Apple. And it's probably 30% of them. So however many Note 7s they didn't get, they're going to be about a third of them that's going to be Apple. Just a crude, back of the napkin estimate. But the idea is they're going to capture some of that.
Jumping over here just to the other stocks that you were mentioning, the Facebooks and the Amazons and the Googles and the Netflixes of the world. What do you think of Netflix here? Because this is a stock that the valuation is a lot more higher than a stock like Apple. Valuation has always been an issue the other way for me in Netflix anyways, and that's why I haven't participated in the bulk of this rally. But you can't argue with the technicals here. I mean, this stock, is knocking on all-time highs here. We are within striking distance of all-time highs for Netflix. Do you think this could be one of the stronger stocks for 2017?
We were at all-time highs just days ago, right?
Yeah.
So here's Netflix, and that one is technically about the same as Apple. Higher lows knocking on a neckline, which happens to be about the all-time high, and they busted right through it. So it should carry higher. And that's one that I do not like fundamentally.
Yeah.
So because I think Amazon at one point, these guys are going to say, oh, we didn't see Amazon coming. Or, whatever else not only Amazon, everybody else is going online. So it's going to be less convenient to have Netflix, in my opinion, unless they really have content that we can't live without. I don't know if you remember the days of must-see Thursday, must-see TV on Thursdays, when they had Friends and all of those shows. Are they going to have something that much interesting that people are going to keep Netflix just for their own shows? That would be the only supporting thing. But as far as convenience, everybody offers their shows online. So I have DirecTV and I can watch it anywhere. I really don't need Netflix, and I don't even eat data. I can just watch it, stream it. So, that's my theory. But technically, I can't argue with it. In fact, I did write up a couple of long trades on it. So, I don't want to fight the trend, but it does need to maintain that higher low trend. Otherwise, it's liable to some drops.
Nick, just a quick point here, and I think you just made I just want to make a great point that you're making. Even though you don't like this company fundamentally, you still, you look at it and you put that in the back seat here and you look at the chart and you say, but it looks like it's going higher. I mean, there's so many people that will do the opposite and say, I don't like a fundamental, I'm going to short it here because it doesn't make any sense. But you got to take, everything into account. Fundamentals are one piece of the picture here, and obviously technicals are a big piece here too. So it's a great point that you're making here that even though you don't like a company fundamental, you could still go long it.
Yeah, I would, but here's the difference. I'll give you an example. Like if I wanted to go long Google, or if Apple falls to 92 again, or whatever it was low, I would not only go long it, I would buy the calls and I would sell puts in it because I agree with the fundamentals. I would not do that here. In Netflix, I will buy a lottery call ticket or call
spread. You play it a little safer. Like the
finite money. I wouldn't put my neck on the hook. So I that's the difference here. At Google, if it falls, I'll do the same. I'll buy calls. I'll sell a put spread. I don't mind the risk on the downside. In Facebook, I would probably do the same on longer term. But I would not do it in Netflix at this altitude. I'll do it later. I've done it in Tesla. I've sold put spreads, but it was around like 180. So, and the put spread was like in the 50s. So I know, not because I like the fundamentals, because I have faith in the fans of Tesla. So same here. It has a lot of fans. So if it does fall, I'll sell a put spread, but not at these altitudes. From here, I'll play it lottery ticket, finite amount of money. Debit call spread is the best way to do it. And folks, don't try to time it. If you think it's going to go up, why restrict it to next week's debit spread, especially if you're buying it at the money? It costs the same at the money. Here or 1,000 years from here, it's the same price, about half the spread. Yes, it moves slower the longer out in time you go, but if I wanted to play it, I'll choose February, at least.
Nick, we're going to take you out of your wheelhouse a little bit, and we got some stocks coming out of the chat here. Thoughts on ARNC? While you're pulling that up, Nick, I'll just take a look here at the $21 level. Couple highs back there in mid-December. Didn't quite get there yesterday. So for me, I'm looking for a breakout over 21.
Yeah, that's too short time for me. I mean, the price action is zigzag, but around a straight line of 20-ish. So pick your levels, plus or minus from there. I have no idea who these guys are. So the technicals are too short time for me, and I couldn't really give you anything with any conviction whatsoever there.
How
This was
about?
the Alcoa spinoff. That's what
Oh,
ARNC
that's
was.
what it is. Okay, how about Williams Company, WMB? This one looks like it's bunching up here near trying to break out.
Getting
WMB.
killed today.
Wait,
Getting
Oh,
killed.
yeah,
65 million share offering.
you're not gonna put me on the hook for that one this time. I've seen it.
Yeah, Joel's trying to set you up. So look at the pre-market chart. It's down 10% today. Huge offer, huge secondary offering here.
Yeah. It's breaking a nice up channel, so I'll give it. I don't know what the headline was that brought it down there, but I do want to do some homework on it before I do anything. But technically, it's it's getting some technical damage here, so I have to assess. First of all, you have to see how big of the size of the candle, like how much selling is getting done, and then see the reason why they're selling off, and then see what can be done about it.
all right. Now also the offering price. All right, Nick. Before we let you go, I'm gonna throw one more at you, and I know you're gonna groan when you hear it, but Twitter. And you know what I'm thinking of doing on this one, Nick? I'm thinking of buying some leaps on this, going way out. I haven't done any
Okay.
weekly so far this year. I mean, is Trump going to keep tweeting when he's in the White House? Do you think he's ever going to stop tweeting? I like the technical formation. I know my downside here. Think they could have, a good quarter or two. And for me, and I haven't said this too much on this, to me it looks like this thing should come back and fill these gaps up here near 24. So, do you have any recommended leap trades for me in Twitter?
Well, if you want to buy leaps, what level are you looking to buy? At the money, like the
Nah, I
20.
mean, what would it make any sense? Could I get any juice? Like if I bought a 20 and sold a 25, would I be? I mean, are they going to make me pay
Yeah.
$3 for that, or do you think I
Well,
can?
it's $3 to buy the January 18 flat out call.
Oh,
If
jeez.
you want,
So much premium.
You gotta be kidding me.
That's
well,
why.
here's the thing.
This is why we have Nick. You sell options, Joel. Come
Yeah,
on.
well, you can do both. You can do both.
Okay.
You can buy the call and sell the 10 option and collect 60 cents, or the 13 option, collect $1.40. So, but you'd be on the hook if it falls to 10. You have to buy it at 13. So there are things to do to finance your purchase. So if you sell a 10 put and you collect 60 cents a contract, that you apply that money towards purchasing a debit call spread, however long in time you want, and then you're just sitting and waiting. If it does happen that it rises, then you benefit on the call spread for a discount because you collected some money on the downside. And if it doesn't happen, you didn't waste as much money as you did, and you have plenty of time to roll out of the debit call spread and let the other ones expire.
I'm gonna go do that right now. I can't wait for the 9:30 open. Nick Shaheen joins us every Tuesday morning. Has a MarketFi product. Create income with option spreads. Thanks a lot, Nick. We'll talk to you again soon.
Looking forward to it.
All right, Valentina says, what about a collar, a synthetic in Twitter? Maybe a little bit. I'm gonna have. I think I should know what that is. I'm not sure. But Dennis, 852. S&P is just trying to go green, having a little bit of problem here.
We haven't discussed a couple of biotech movers
Big ones.
today. Yeah, VRX and ILMN both moving this morning in pre-market. Valiant sold a bunch of stuff yesterday. They sold.
We got cash! Yay!
They sold Dendrion. They sold Caravay, Acne Free. So they just sold a bunch of assets. So yeah, cash on the Valiant front. The Illumina front, their CEO said yesterday that he saw Q4 revenue coming in at around $619 million. This is at the JP Morgan Healthcare Conference. So what they reported in November on their last earnings report was $607 million in revenue. He's seeing the following quarter at $619 million in revenue. So a bump up quarter over quarter, and that again coming at the JP Morgan Conference from ILMN.
Dennis, can I predict what you're going to say about VRX?
January effect?
Yep, exactly.
Oh, this is, we can't say that totally because this is this bill. They need cash. They need cash. They're going to get some cash here, it sounds like. So that's why the stock's trading up. But is it really good news for a company that they're selling off assets to stay alive? I don't think it's good news in the long run. So, VRX is a tough story here. It's a tough sell for me. I mean, the stock, I said back at $40 to zero or it's 100. It keeps looking more like it wants to be a zero as it continues to leak here. I'm not sure that's still the case here or not. They start selling off assets, maybe they can find their home here, but it's not going to help them get back to 100 when you start selling off assets. So 100's off the table now. And now you think, okay, well, maybe they want to take zero off the table too by raising cash so they can start, not having so much debt. So they're trying to, obviously make my 0 or 100 thing go away. But that being said, when you start selling stuff and you need cash like that, it's not good for long-term prospects of the company. So I don't think it's a 0 anymore or 100, so I'll take that off the table. But I just don't think, it's going to be on the comeback trail here and continue to move higher because they sold a bunch of good stuff to get cash.
I wish old Ackman would have shopped around that block trade with us when he dumped it. Where was that? Like at 12 or 13 or something?
But he dumped a low.
Oh.
Is he still in it? Or is he out? Is he out completely on VRX?
No, he's not out. He's not out.
He dumped a boatload, though, for tax loss.
Did he?
Yeah, I mean, that guy will probably never pay taxes again. I'm having problems figuring out when he did that. I think it was like in the $13 area. Dennis, we skimmed over imbalances. Any changes in imbalance?
Alibaba's bigger, and Alibaba's moved up more. 189,000 to buy an Alibaba here now. That is impressive. Stock trading up $1.40. I think it's going $100. Now maybe not today, but I think it's on the road to 100. I like Alibaba on the technical breakout here through 95 now. Yesterday, I like the fact that everybody saw the CNBC with Trump and Jack Ma shaking hands there. Doesn't hurt the short-term prospects. As things move on sentiment, things move on, hey, here's a foreign company here that Trump's going to work with. I want to own that company. That's the thought process here. And I think a lot of people saw that video here overnight, and I think they're coming in and buying it here this morning. So I don't know. I don't mind Alibaba here for a trade. Long-term still valuation issue for me on this one. But for a trade, I think this could go to 100.
Pre-market high, 96.30. I see absolutely nothing until you get up to a double top here, right near triple digits, 99.99. Well, actually, there's a double top at the 98.50 area. Maybe I'd take a little piece off there, and then if you're holding out for the home run here, 99.99 up to 100.62. That's the $100 area that Dennis talked about. Dennis, I want to thank you for one trade that you gave me last week, and I know you got out of it, but I'm still holding on to a little chunk
I got out too soon.
AT&T.
Yeah, I did short that day, and I shorted AT&T and Verizon in the pre-market on the day of ex-dividend because I've done that a lot of times in the past. It's been very good, and I think I can't,
it was nothing.
I think I made 50 or 60 cents on AT&T and 50 or 60 cents on Verizon in the matter of an hour, and I was like, this is over a 1% gain. Scalper blood in me, so I took it. Should have held on because it continued to go straight down. I mean, this was just classic textbook play. Stock runs up ahead of the ex-dividend day to a ridiculous level, goes ex-dividend, everybody wants to sell. I mean, that was a classic play. I tweeted about it beforehand. Usually I don't do that, tweet my trades ahead of time, but I did. And obviously, this one worked out well.
And of course, you can guess how many I have left. After buying a nice chunk here at 43. How many do you think I have left?
Well, I don't know how many you started with, so I don't know if you want to disclose it either. You have 20% left.
No, I'm down. Nope, I'm down just to like 5. And that's
5% left.
Yeah.
You always the last. We used to always. We used to say that, like when you do 2,000 shares of something, you make the most of the last 200.
Exactly. Yeah.
As we start laying out.
That's why I wanted to illustrate that point.
I mean, at a certain point in time, it's going to reverse here now. I think AT&T's got it's down here again in the pre-market. Got another selling bounce of 89,000 shares. I think $40 a nice psychological bounce level. We just watched it fall from 43, which is a huge move for AT&T. You can see, who cares? What's moving down 1 or 2% when you see stocks moving up. This is the type of stuff that is predictable that I make my living on. This is stuff that I'm not going to lose 5-10% on in a hurry. And this is something I took zero heat on the trade. And when you can pull in 1 or 2% on a zero heater, that is a great trade.
All right, just I want to leave you guys with a number here in gals in the S&P futures. 2265 was your close. 2 of your last 3 closes right there, 2264, 2265. That's a big level. I'll call that a big level for the rest of the week here. A lot of zig and zagging here. But keep an eye on 2265, 859. Spencer, you want to wrap things up and preview tomorrow's show?
Yeah, I just want to note, I've been thinking about this during the show, actually. At about 10 minutes before our show started, Dennis said he had to run out and shovel, and then he was back by the time the show started. And I'm thinking that is one fast shoveler. That's what you get for living in Canada.
Speed, man. I have skills to pay the bills. I'm good at shoveling snow. If I didn't make it as a stock trader, I was gonna make it as cleaning driveways.
I just think how quickly I've never done it that quickly in my life. So, but I guess that's the Canadian blood for you. All right. On tomorrow's show, we got a good one for you. Our guest is Jeff Goldman. He's the author of Failed Traders: The 20 Common Mistakes Committed by Over 1,000 Losing Traders. So I'm sure we've got a lot of educational lessons to come from that tomorrow. So that's our guest, Jeff Goldman. If you missed any part of today's show, including our chat with Nick Shaheen, catch the whole thing again on our podcast or on iTunes, SoundCloud, and Stitcher. Also, please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Don't forget about Benzinga Pro. It's Benzinga's real-time news platform. Get a free 2-week trial by calling us up at 313-723-2000, or you can just go to pro.benzinga.com. Okay, hope everyone has had a good Tuesday morning so far, and you have a good rest of your day. We'll be back with you on a Wednesday for our chat with Jeff Goldman, and we'll see what else is going on in JP Morgan. I'm sure we'll have some more Detroit Auto Show news for you tomorrow. So have a good rest of your day, everybody.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.